Good day, traders, divergence traders. How you doing today? It is Friday, July 14th, 23. All right, let's look for some setups, eh? Here we go. Okay. We did not have a trade to buy it here in the open. However, after 10 minutes, 15 minutes, we did have we did have a setup. I call it like a pullback setup, where this candle closed near the low of that candle, which created it red. So in an uptrend, you buy the closes of red candles. In a downtrend, you look to sell the tops of blue candles. It's called buy the dips, sell the rallies. You know, you don't want to buy it up here. You want to get in at a better price because it just rallied all the way up here. So you would buy it right here. Actually today, right here, that's where I bought it. And up it went. So then there was divergence right here. Because what we're looking for is a high, a retracement, then a higher high, right? That gives us the indication, okay, this is bearish divergence, right? Just like that. Now, if you would have done this trade, okay, you would have got in right here on the opening of this candle. So it would have went all the way down here to the, I'll even show you, to the 50%. See, 50% right here, 50%, and it went right back up. Why did it go back up? 50% Fibonacci is very famous in futures, and in Forex, the 38 and the 61 are the famous ones. The famous levels you want to buy off of if price is coming down to them, or you want to sell off them if price is coming up to those levels. Okay, let's move on. Now, if we would have got in here, okay, the 15-minute is still bullish, okay, and it would have said no. If you want to trade with the trend, you do not enter short here, because the 15-minute time frame is still up. And what determines these up and down arrows? The 5, okay, EMA close, and the 7, okay, EMA 7, EMA shift 1, okay, on the close. That's what this is all based on. So, like I said before, it's trying to stop you from selling in an up move or buying in a down move. That's what this is indicators, trying to stop you from doing. However, today it would have worked out. So if you would have sold right there, your stop was 48 pips, and you would have got it. You would have got your 1-to-1 win-loss ratio. But I myself want to trade with the trend these days because I've got burned so many times on these kinds of setups, okay? Now, if you trade the 1 minute, there was probably a trade right here. Let me just guess to see where there was a trade. I bet you there was one right here. We're going to go look at this in the 1 minute. Let me show you. And I bet you there was another one right there. So let's go to the 1 minute. And we'll take it off auto scroll. See? See? How did I know that? How? See, at the time, the 5 minute was over here, the arrow was up. Okay, so this is the 1 minute. Here would have been the entry right here. The divergence is right here, from here to here, from here to here, okay? And then the next divergence was from from here to here and here to here, okay? Believe me, there was divergence to buy right here and here, okay? Or here, wherever. No, it was right here. Both would have been winning trades, okay? And then they took her down, as you can see. So I'm showing that, hoping there's this one guy that I sent the indicator. He says he doesn't know how to use the indicator. I said, you know, go watch the videos and you'll understand it. It's all about looking at a higher time frame so that you know the real, if there's a dip along the way, right, a pullback, whether you're buying or you're selling, if you don't want to trade against the trend, you got to make sure that this is in alignment with the trade you're trying to do. So if you're trading the 5-minute right here, okay, you wouldn't have sold it today because the 15-minute was saying up. You need the higher time frame to be in agreement with the current time frame that you're trading. Anyway, I hope that makes sense. So, right now, actually about 5 minutes ago, I had to step away from the computer for a little bit. There was a setup. Let me get rid of these lines here. See, now this trade here lines up because the 15-minute time frame, the 5 was above the 7, okay, which makes bullish on the 15. So say this trade you did here, it was a fake out and that's it, it didn't go any farther down, then that would have been a bad trade, and this indicator, dashboard, whatever you want to call it, would have saved your ass. But now we have this setup, okay? We have a pullback and another pullback in the trend. You can see it right down here. This go to here, okay? And you would have bought right in there in the opening of this candle. Okay? That's hard to see, hidden divergence. And everything's telling you to go ahead. Doesn't mean it's going to work out. You'd want this kind of setup probably more so over here, you know, within the first hour of the open of the stock market. Okay, so that's the NASDAQ. You had a sell trade, but that would have been against the indicator, but it would have worked out. And now here's the buy trade, and it's agreeing with the dashboard because on the 15-minute, trend is up. Let's now look at the Dow and see what it did. Okay, did chopping. That's what it did. This was the opening right here, but the divergence was from way over here in the middle of the UK session and the US session. Okay, right there. And you would have sold right on the opening if you wanted to do that right here, and it would have ruffled you up a bit, you know. It would have been a rough ride, very bumpy ride here, look. But if you got in and you put your stop in the correct place, which is right up here, just above the recent swing high in a sell setup, right? You would have done okay. So your stop would have been like 40 points. And it went down 117 points. Almost 3-to-1 win-loss ratio to that point. It was a winner. Chicken dinner. Let's look at the S and the P. And we have rallying up, put in a high and a retracement and a higher high, right? Just like this. And that's a setup. See? Doesn't perfectly line up. I could draw it from there to there. Okay? So it should go technically right here. Okay? And right here. and this big swoosh down, somewhere in there you would have got short. Let's say you get in here, or you wait for a better price and you get in up here. Okay, so say we got in at a better, say we just jumped in here when it was crashing down. Your stop would have been almost 7 points. Went down 12 points. You definitely would have got 1.5 RR on that. Let's now look at oil. Oh, look at that round bottom swoosh. Okay. So that didn't line up with this, you know, because this mountain peak is higher than this one. To sell it here, and down it goes. Didn't have that. So there was no trade on the 5 minute. Let's look at the 1 minute and see what happened. What time was this? Yeah, it's 9 o'clock. That was the open of oil right here. But let's look at the 1 minute for fun, just to see if we see anything from over there. Yeah, there's divergence, so you woulda, coulda, shoulda, would've drew in your line like that and like that. And by the way, I always put these lines in the chart, the chart, to prove to myself, yes, that's divergent. It's there. I see it. Even though I can see it without putting the lines. It's just a good practice to get into, so that, you know, like if it starts going the wrong way, like say you shorted right here and it starts going up, and you're going to start freaking out and going, oh shit, oh, what did I do? What did I do? Right? But if you drew this on the chart, you'll go, that's why I did it. It's bearish divergence. So you would have calmed down, and guess what? Then it would have turned into a winner when it went down here. Then it would have came back up. Right? And then the end result is 40 points, 40 ticks with a 20 tick stop. Okay? And that's it. It would have worked out for you. And here was another one along the way. See, that's going up right here. That's going down. You would have sold right in here. With no drawdown. You see that? It just goes down and down and down. So how many points did that go down if you would have got in? There's 134 points right there. And that's it. That would have been your trades on oil today. Okay? But there was no trade on the 5 minute. Hold on, let's look at the 15. Is there a trade on the 15? Oh yeah. Oh yeah. Let me show you. Right here, double top, and right here. See that? You would have sold right up here on the opening of this candle, right up here, which was at 9:15 today, Eastern Standard Time. Right at exactly 9:15, you would have sold it. And your stop would have been up here, 50 pip stop, point stop. Went down 150, 148. You see what I'm saying? So there's divergence always on all different time frames, and you just got to go look for them, you know. Sometimes you'll more likely see it on a lower time frame than a higher time frame, but sometimes it's on the higher time frame, like right here. Double top, sell it, down it goes. Yeah, indeed. Okay, so that's oil. Let's look at gold. Oh, look at gold. I'm sorry, I don't mean to laugh. It's just, I know it's so manipulated, these markets. They're doing that shit on purpose, man. I'm talking about this shit right here. See this big wick down? 91 points. What time was that at? 10 o'clock. Oh, that was the news. That was the news that affected the gold. Yeah, the gold really gets affected by the news a lot of the time. So if you're a gold trader, oh, be careful about the news, okay? So anyway, let me show you the setups right here. Here's a high and higher highs. 3 wicks too. Look at that. That told you right there. Sell! Sell now! Before it's too late! Sell! So, you would have got in right here. Sell it there. Stop would have been there. 35 points. And you got your 35 points right there. Then, I'm not even going to count it. There was divergence. Oh, excuse me. There was divergence from this high to this higher high. See, right here. Just like this. I'll draw it on there for you. I'm burping now. I'm sorry. See? Where would you get in? It came down too far, too fast. Would you want to sell down here? Hell no. You wanted to sell up here. Somewhere up here. They just smashed it through the pivot. So then we have one more. It's from this low to this low. Lower lows. Why do you always see, let me ask you this question. Why do you always see, you know, that the market goes up, does a retracement, goes up higher, always puts in these higher highs for some reason before it crashes down? I'll tell you the freaking reason. They're going after the stops up here, okay? They know where the orders are. They go after them, and then they take it down. Just like down here, okay? There's all kinds of people buying in here. See that? What did they do? They smashed it right down your throat. Because they know the gold is sitting right here. You just got to go digging for it. They're gold diggers, man. They always trick you into buying so they can sell it off. Or they trick you into selling and then they buy it up. They're bastards. Okay. This is the divergence here. Hold on. Like when I'm laughing here when I see these fucked up moves, if you did that move, please do not take it personally. I am not, you know, directing anything on you. I'm just trying to explain to you how they do this. And that's why divergence is so powerful, because they go after the stops by putting in the higher high up here. They go after the stops, right? And they take it down. Then they take it down here to go after the stops, and they take it up. You know, it's just, and then they're always getting because people want to jump in every little corner that the market makes, right? They know there's people in there on the wrong side, and they ram it up your nose. See right here, up your nose, or they ram it down your throat. You see what I'm saying? Or down your throat, because they know all these people bought this up right in here. So then they smashed it down. And that's what they love to do. Let's carry on now to the pound yen. Oh yeah, divergence is right there in front of my eyes. Same thing, right? High, retracement, higher high. Why did they zing it up here? What time is this at? Oh, this is the news also. Still, they knew there was all kinds of people who got short in here, and they went after, you know, all this whole rally up. They knew a lot of buyers, holding. What did they do? They knew your stops are down here. See, they came and got your stops right here. That's what they do. That's their job, to steal your money. That's what it's all about. That's what trading's all about. If you're at a real futures broker, okay, If you made money today, there's other people who lost, like traders who lost. Okay, but if you're at a prop firm or a forex broker, if you made money, you took it from the owners of the prop firm, or you took it from the owners of the forex brokerage where you trade. That's it, plain and simple. And like, I've been trading 22 years, okay? So I know what I'm talking about. Even though your account will say live account or whatever, like at a forex broker, doesn't mean shit. It's a demo, man. It's a demo that they're putting at the top with your account number that it's live. And it's not live. It's them trading against you. Why? And they trade against probably most of their clients because more than 90% of traders lose. And who do you lose to? You lose to the broker or you lose to the prop firm. And all this bullshit about, I'm just going to get into it today, about prop firms saying, oh, we're going to put you on a live account. That's bullshit, man. It's all simulation. It's all demos, man. So if you actually get past all their rules, their delays of this and this, this limited amount you're only allowed to withdraw and whatever, it's all set in place. And whatever other fees they charge, just to stop you from taking money out of there. Because if you're taking money out of a prop firm, like if you're profitable and you're withdrawing money, that money does not come from traders on the other side of it. It comes from the prop. Well, it actually comes from traders. Yes, the traders who keep losing and never doing, withdrawal. That's where the money's coming from. There's no live accounts, not even on one of them. I bet you that's bullshit. It's all demo accounts. This freaking, I call it a scam myself. But this shit's been going on for like over 10 years when I first saw these. They used to call them trade challenges then or whatever, but if you think it's hard now to pass an evaluation and whatever, one of these prop firm accounts, you should have seen it 10 years ago. Like add on another 100% rules to the cake there. You tell me how freaking hard it was to pass them. I never did it. I've never tried one back then. I'll admit it. I tried one recently, and because of the pressure of time that I had to do it, okay, it's like, fuck, man. It caused me to blow it up. That's what happened. And that's why that is what it is. That's one of their rules at this place. You got so many days to do it. You don't do it, you're fucked. And what's the biggest scam of prop firms? Listen up now, ladies and gentlemen. Is the fact that they're saying you have, say, $50,000 buying power. That's bullshit. That's total fucking bullshit. You don't. Okay? And they allow you to trade like 5, 10, 15 contracts. Oh yeah, they put more in there because they want you to trade more so you'll blow it up. So then you'll have to join again. Okay? So the point I was trying to make is this buying power is bullshit. Whatever your stop loss, maximum daily stop loss, or whatever they want to call it, okay? The amount of that's how much buying power you have. Because if you trade it like as if you really have a $50,000 in there, you'll blow it up. You'll blow it up real quick. So anyway, I just thought I would do my little rant about that. It's all a big scam, man. I'm surprised that the futures what do they call NFA, National Futures Association or whatever. I'm surprised they let these prop firms do business. I'm surprised. Like right out of the USA, they're doing it too, and they know the NFA knows what the hell's going on. That they're purposely like dangling a carrot, or let's say dangling $10,000 wrapped in a gold band in front of traders to join their prop firm, whatever. Did you know that the statistics are something like it's like 2% or something of people who trade on these prop firms, they never make any money. Just 2% does. All right. I said enough about that shit. Okay, this is pound yen. There was no trade here. Came down too far, too fast. Made a big, deep ravine. And the euro yen? Same divergence, same trade, same time. Here we go. High and higher high. So somewhere you would have jumped in here. You don't want to sell after it came way down here, but it did keep going for a little bit, and then they bought it back up. So I know for a fact when the price was up here and the setup was setting up, I know that my 15-minute time frame would have not been in agreement with it. We're on the 5-minute. So I would have never done the trade because, let me tell you why. Look at that. Right from the low of the day, we've been in what? An uptrend. 196 pips, man. You don't try selling in an uptrend, and you don't try buying in a downtrend, because if you do, you'll get screwed. There was a trade right here. Let me just show you now that I squished the chart down. This is bullish hidden divergence. It's going a little bit longer through, well, it's just two little red doodahs. So you would have got in long right there. Stop would have been there, 15 pips. Went up basically like 50 pips. All right, let's now look at the pound dollar, last instrument of the day, and it's a wash. It's a wishy wash. But there is two trades still, believe it or not, from here to here. From here to here. That is divergence, ladies and gentlemen. Right there, sell it, boom, stop. Would have been 10 pips on the pound, and it went down 14 pips. You would have got your 1-to-1, 15 pips. You would have got your 1-to-1 win-loss ratio. So what do we have down here? We have bouncing off $1.31. This is pound dollar. Yeah, it's pound dollar. So you got low and lower lows. You can see how they bought it off there 3 times and took it up. Yes, indeed. So you would have got long right there. That was at what time? Oh, right at the opening of the stock market. You would have bought it, and it went up 22 pips. And your stop at that time only would have been around 10 pips. Then they smashed it down people's throat. Oh my God, I'm dry here. Sorry about that. I just did a lot of talking about those fucking prop firms. All right. They're laughing all the way to the bank, just like the Forex brokers, okay? I believe the only market you can trade where you really want to be assured that if you make money, you're going to be able to take it out. No excuses, no delays, no bullshit. And that's real futures brokers, okay? And yeah, like with other places, they're going to do everything in their power to stop you. Anyway, there's no trade here to buy it. See all the people that bought in here all the way up? Where'd they put their stop? Right here. What did they do? They came and got your stop. They hunted you like an animal, a trading animal. They hunted you down. Yeah. Now this here, that's not the prop firms or the brokers doing this. If there's manipulation here in this move right here, it's the exchange who's doing it. And I believe they're crooked too. I really do. These markets, they're just all crooks, all crooked. It's always been like that, and it probably always will be. Wherever there's money to steal, somebody's trying to steal it. You know what I'm saying? Anyway, ladies and gentlemen, I hope you enjoyed my video today. If you haven't done so, please hit the like button. Please subscribe to my channel. I would appreciate it. I want more and more people to find out about divergence and how powerful it is. It really can help you in your trading. So thanks for listening. Thanks for watching. Have a great weekend. Good luck and good trading.